Hey folks, let's talk stock markets for a minute. I think now that we've got the last Fed meeting out of the way and Jerome Powell's rhetoric and his demeanor, I suppose we're implicitly less hawkish and more dovish. And it looks like the market's now pricing in that we may not get another rate hike at all going forward. Whether that's true or not, we don't know, because the Fed have said they're going to be data dependent and look at things like jobs, which are coming up today. The NFP, a really important number in guiding the way the Fed views the market, combined with a whole lot of other figures. Of course, the inflation rate, the primary driver of this increase in interest rates, and a few other things like GDP and average hourly earnings and the credit market, all that sort of thing. But I think now that we've probably seen the end of rate hike increases and the market believes that too, we can now enter a period where the markets are able to rally up into the point, I think, when the Fed starts to cut. And normally when the Fed starts to cut, that's the time when things are starting to break more seriously than they are already. And normally when you get the rate cuts coming in, that's when you see the market starting to come off. But we've got this sort of Goldilocks period now when the market is kind of optimistic. They believe that there won't be any more rate hikes, and the economy is still, on the surface of things, looking pretty strong, giving room for these markets to rally towards the end of this year. Seasonally, it's a good period as well. Sorry to interrupt you, and thanks for watching so far. If you've enjoyed this content, I'd really appreciate a like and perhaps a subscribe to the channel. It helps the channel grow, and I appreciate every single one of them. Thanks so much. So let's have a look at where we are in NASDAQ and S&P. And I'll just give you my thoughts. So we've got this channel, which I've been talking about for some time on NASDAQ, which my contention is this is a potentially downward sloping bullish flag. And we touched the bottom of the flag a few days ago. It's also where the 200 period moving average is on the day chart. So a really important level. And also just above that 38% retracement level of the entire move from the bottom to the top this year. So I think we're going to probably get some faffing around today until the NFP comes out. I don't know what the jobs numbers are going to be like. We've seen really good numbers, some blowout numbers in fact, but they often get revised downwards later on. So we could see a similar sort of thing, a fairly good buoyant number, a strong number, which could be revised later on. We might see some revisions to the previous numbers. But if we do see some weakening in this NFP number coming out now, the unemployment rate too, then we could see this market continue to move higher today. I think at some stage, given the backdrop that I've just given you, that we'll break out through the top of this channel, move up to this high, which is just below 16,000, which was achieved in July this year, and then eventually break out through that and perhaps make a new all-time high a little bit later on. That would take us above 16,700 up into these regions, maybe 17,000, maybe 17,500, maybe 18,000 before a dramatic reversal when the Fed starts cutting rates. So that's my overall view of the market. I don't think we're going lower from here. I think we could have some consolidation underneath this channel top as we approach it, and maybe some significant pullbacks and then eventually a break through it. We see a similar picture on the S&P, although we do have this very crucial key resistance level above us created by these swing lows over here, and that's at around about 4,330 to 4,340. If we can get up through there, the 50-day moving average and the 100-day moving average will have a similar scenario to the NASDAQ on the S&P. We'll approach the channel top, maybe a bit of a pullback, maybe some consolidation, and eventually a break up through this channel top to this year's high, and then after that, perhaps up to new all-time highs. This has got a little bit further to go than the NASDAQ, but if the NASDAQ and the market in general keeps moving higher, we could get above 4,800 and perhaps reach up to 5,000 and above. So for now, we don't have any positions on these indices, and I think we're going to have to wait for the NFP to perhaps pick out levels where we could be buying these markets on significant dips. What's encouraging when you look across some of these tech stocks, Microsoft looking really strong, breaking up through this recent high and perhaps heading up towards July's highs a little bit later on. We've seen a dramatic reversal on Nvidia, gapping up yesterday, reaching up into these moving averages, and we'll have to see whether that can pursue this upward path further, although I don't think the chip stocks have got as much to offer as some of the other stocks. And then we see Apple and Tesla also gapping up yesterday and closing really strong. So all of those look pretty supportive for the market in general. And perhaps we just need to fall back a little bit today during the NFP, fill these gaps below us on names like Nvidia, Apple, Tesla, Microsoft, AMD, Google, etc. And that would give these indices a little bit of space to pull back down so that we can get some buying opportunities. And it'll all depend on the number that comes out from the NFP today, including the employment number, and how the market reacts to that. Take care, have a great trading day, and I'll see you in the next video.